Good afternoon, ladies and gentlemen. On behalf of the Wycliffe Foundation and the Jesus Film Project, welcome and thanks for joining our 7th in a series of webinars on gift and estate design. My name is Mark Mayers and I'm serving as a regional representative in the Fund Development Office of the Jesus Film here in Southern California. I'm going to be your moderator for the next hour. Perhaps some of you watching today have taken part in some of our previous webinars. Welcome back. Thanks for joining us. Today's session is entitled Tax Planning, Deductions, Peace of Mind, Knowing Your Bases Are Covered. By the way, if you missed any of our previous webinars, the recordings of that content are available on both ministries' websites. Topics covered in past webinars have been estate planning to accomplish your goals and dreams and other tax-advantaged design and gifting strategies. The presentation today comes to you through the joint partnership of the Wycliffe Foundation and the Jesus Film Project, a ministry of Campus Crusade for Christ International. Wycliffe and the Jesus Film have partnered together for many years in the area of language translation, but now we've teamed up in serving our friends and financial partners of both of our organizations in the area of gift and estate design. Athletes in Action, Family Life, International School Project, and other Wycliffe ministries such as the Seed Company, JARS, and the Graduate Institute of Linguistics are also joining us in our webinar this afternoon. Thank you for joining us. Through the power of global web technology, our presenters are going to share with you essential concepts that can help you preserve your estate, provide more for those you love, and advance the ministries and organizations you care about today and tomorrow. A number of past webinar participants have already taken advantage of this opportunity. Effective biblical stewardship has been practiced and lives have been changed as a direct result. One recent past webinar couple have created a tax-wise plan that will generously benefit both Wycliffe and the Jesus Film at their homegoing, having put their home and other assets into a trust. During our webinar, you'll no doubt have questions for our experts. I know I have them all the time. We will answer questions at the end of the presentation, which should be about 25 to 30 minutes. During our session, you may submit your questions at that text box at the lower right-hand corner of your screen. If after our time together today, you would like to share this presentation with others, or for some reason you need to leave early, a recording of this content will be available at the same web address on the 5th of October. That's the 5th of October. A recording of this webinar will be available to you. Our presenters are with me here in Southern California today, so let me introduce our gift and estate design experts. Michael Acapente has become a dear friend and is from Monument, Colorado. Michael's worked in the gift estate design area for over 28 years with organizations that include Campus Crusade for Christ International and the Salvation Army. He's currently a gift planning advisor with the Wycliffe Foundation, one of the ministries under Wycliffe Bible translators. Michael studied business and economics at UCLA and holds a master's degree in taxation from USC, so he's just a little schizophrenic when it comes to sporting events and who to cheer for. Michael, welcome to the webinar. Jay Link is from the suburbs of Grand Rapids, Michigan, and is also joining us here in Southern California. Jay has served in financial and corporate charitable foundation leadership with a Fortune 1000 company for over 30 years. Since joining our team as a gift and estate designing consultant, Jay has used his expertise in accounting and charitable giving to help ministry partners become more effective stewards of the resources God has entrusted to them. Along with Jay's undergraduate degree, he has an MBA and has earned professional designations as a certified public accountant, certified management accountant, and a certified gift planning associate. Jay, welcome to the webinar. Both Jay and Michael have served countless ministry partners for many years, helping them leverage their current as well as deferred giving after their homegoing. So if your goal is to be the most effective and tax-wise steward you can be, you're in the right place. Without further introduction, let me turn this presentation over to Michael. Michael?
Hey, thanks, Mark, and welcome to all you folks who are joining us today to hear this webinar. Hopefully, over the next few minutes that you're with us, my colleague Jay and I will be talking about tools and strategies you can employ using the assets the Lord has entrusted to you to advance His kingdom as well as accomplish your own goals and objectives. Today, we'll be talking about 6 things that we believe will be really helpful to you. We'll be speaking on the topic of direct gifts of appreciated assets. We talk about what's called a zero tax gift and sale strategy with assets such as these. We'll describe to you the great benefits of considering a donor advised fund. We're going to talk more about the charitable role of our IRA law, which we hope will be back on the books before too long. And we're going to finish up with gifts of oil, gas, and mineral interest. And then last but not least, talk about the estate and gift design services that both our ministries offer. First, though, to set the stage and the basis for what we're going to talk about, Jay's going to talk about taxes and how we deal with those. Jay?
Thank you, Michael. Well, obviously, with the end of the year in sight, the whole notion of taxes is on everybody's mind. And this is a real hurdle that we want to help people overcome. So if you look at the slide, you can see that there's various types of taxes that we have to deal with. The first one would be income taxes, and there's federal and state. The federal range from 0 to 39.6% because we're in a progressive tax system, and the state runs from 0 to 13.3%. But on top of the income tax, we also have a federal capital gains tax, which can run from 15 to 20% depending upon your income tax bracket. In addition to the federal, we also have state capital gains tax, which can run from 0 to 13.3% depending upon the state that you live in. Now, the average is about 5%, but many states are way higher than that. And then last, we have the Affordable Care Act tax, which is about another 3.8%. So you can see there's a lot of taxes that we have to kind of work through. We want to help you overcome that hurdle. Most people don't realize, when you think about capital gains taxes, that they really are optional. Now, what do I mean by that? Well, you can obviously pay them if you want. You can postpone them or defer them. But you can bypass them, and you can do that either at your death, which might not be your preferable time to do that, or you can do it while you're alive through charitable giving. And when you do it while you're alive, you can actually transfer the dollars that you would pay to a government entity to a charity of your choice and have kingdom impact. Plus, you get to see the impact that you're having while you're alive. Let's look at the first strategy. The first one is the direct gift of appreciated assets. Now, what are appreciated assets? Well, they are those that have increased in value since you acquired them. And some examples might be stocks, bonds, mutual funds. Could be real property, commercial, residential, farms, or even just vacant land. Business interests in partnerships, LLCs, S Corps and C Corps. Or it could be artwork and collectibles. And collectibles, when we use that term, we think of things like stamp collections and could be antiques, could be coin collections, those things of that nature. On the next slide, you'll see that there are some benefits, specific benefits of gifting appreciated assets. Now, we've only identified 3. There's many more, but these are 3 that we think are particularly significant to you. The first one is that if you gift appreciated assets, you will experience multiple layers of tax savings. And if you think back on that previous slide that we showed you and you saw all those different layers, we can help you overcome a number of those. You also are able to give substantially more from assets versus just your cash flow. And let me share an interesting statistic with you. Most people, when they do their giving, they give it out of 10% of their resources, and that tends to be their income or their cash flow stream. They aren't doing it out of the other 90% of the resources that they own, which tend to be either non-liquid or property kind of assets. So we want to help people really mine that other 90% of their resources for kingdom impact. And lastly, obviously, if you're going to do giving and avoid having to pay taxes, you're able to transfer those dollars, as we mentioned before, from going to the government, which would be a charity that you may not choose, to a charity that you would choose. And so you can have profound impact for the kingdom. Now, I'm going to have Michael share with us an example of how this might work. Michael?
Thanks, Jay. Yeah, we thought, Jay and I work with a lot of folks, and we want to share some examples of people who've employed these things. And the first example is a couple, Nick and Rachel. We had talked about making a gift to a Wycliffe project and how they could fund it. Now, many people, as Jay mentioned, Most of us are checkbook givers, but we said before we talk about, let's talk about how you can do this in a way that's more tax effective. As it turned out, Nick and Rachel had some stock they had bought that was worth about $10,000. They paid $4,000 for it. If they made a gift of cash at a 40% tax bracket, that's about $4,000 in tax savings. However, and this is what we suggested to them, if instead they made that gift out of appreciated assets, like the stock that they had, not only would they get a deduction for the value of the stock, but the additional tax benefits would be significantly higher. So, moving on to the next slide, here's what we did. They made the gift of the appreciated asset. As you can see, under our tax law, you're entitled to a fair market deduction of $10,000. And then Jay mentioned those layers of taxation. As you can see, that the title of the slide is quintuple tax savings, because there's actually 4 layers of tax savings they were able to accomplish. Federal income tax, state income tax, the capital gain taxes at the federal level, state capital gain tax, and the Affordable Care Tax or Obamacare tax. You add those all up, the total tax savings is over $5,700. Compare that to the $4,000 in tax savings from a just gift of cash, you can see there's a significant difference, almost a 43% difference, or about $1,700. Theoretically, that went back in their pockets because they made a gift out of the appreciated assets versus cash. Going on to a second idea, you see something we also often will suggest as a zero tax gift and sale. And what do we mean by this? Well, sometimes a person may say, Jay or Michael, that's a great idea, but I don't want to give away the entire asset, whether it's stocks or perhaps real estate. Often we'll see that in this scenario. Is there something we can do without having to give it all away? Well, we'll talk about something called the zero tax gift and sale. And essentially what that means is that if you gift enough of a portion of an asset away, it'll create charitable deductions. And then you can use the tax savings from those deductions to offset any capital gain taxes you realize in the part that you kept and sold. So to illustrate how this works, you have an example of a couple who actually had an income property in Orlando, near where both Crusade and Wycliffe are headquartered today. They own an income property they purchased many years ago. It has substantially appreciated over the years, and frankly, it's worth about $500,000 now. Their tax basis, and the tax basis is a term we use for determining capital gains, is what they paid for it, plus improvements, less depreciation. So their tax ratio was about $100,000, and beyond tax considerations, which we're going to talk about in a moment, they'd say, we're just tired of being landlords. We're tired of the things that come with being a landlord. And they want to sell that property. They'd rather just go in their RV and go visit their grandkids who live in another part of the country. But there was one significant obstacle. If they sold the property outright, they're facing a capital gain tax of approximately $100,000 in their case. So they know they can't keep all the sales proceeds, but they sure think, wow, we'd rather minimize our tax problem we can, and if we can give more to the Lord's work, so be it. At least we can decide how that's going to be used and whatnot. So as a basis of what we talked about, we said, let's look and see what would happen if you just sold it outright. And as you can see in the slide, just popped up how the math works. But the number I want you to focus upon is that red number near the middle. $100,000, that's a loss of capital. That's a loss of money that can be employed for the work of the kingdom. And so starting this basis, we ran some numbers, said, okay, Kirk and Cindy, to achieve the zero tax result, here's what you need to do. If you gift approximately a 40% interest, slightly less than 40%, you'll see the green box there on the right, that's going to create some income tax savings at their tax bracket of about $62,000. Then you have the portion, which is kind of the grayish blue box on the left. That's what they kept and sold. In a sense, what we had a joint sale. They gifted the asset, part of it to Wycliffe, and together we sold this income property. Now, in the part that they kept and sold, their capital gain tax liability is about $62,000. And essentially what happens is you have the tax savings are used to offset, on the income tax side, are used to offset the capital gain taxes on the sale portion. Now, just as a caveat here, This is something where you really need to have your CPA involved, to have him or her run the numbers in the context of your overall tax situation, so you can see, okay, can we use this offset all in the year of the gift, or is it going to be in the year of the gift plus some carry forward years, because there are certain limitations in how much you can deduct in any one year. So again, important to have the CPA involved. This tax offset will work in probably 1 to 5, maybe 6 years, depending on your other income. You'll also notice there's a little box off there to the lower right to a DAF for charities. What's a DAF? Well, that's an acronym for a donor advised fund, which Jay's going to talk about in just a moment. But we understand that people have multiple charitable interests. Wycliffe, Crew, their church, other things. And so we like to employ the idea of a DAF to allow people to make gifts to more than one charity, not just a charity with which they're working. And to explain more what a DAF, or a donor advised fund, is, I'm going to hand it back to you, Jay.
Thank you, Michael. Let me just add an additional point to the case study that Michael just walked us through. We can actually work with you and help you figure out what that split should be between the portion that you sell and the portion that you gift, so that you can zero out that tax. So we can actually provide that guidance for you. Let's talk about the donor advised fund. What is it? Well, it's a charitable giving fund that is separately administered by a public nonprofit charity into which donors make irrevocable, tax-deductible contributions, and then from which they can make grants to various charities of their choice. Now, this is not a new strategy or tool. It's been around since the 30s, but it's really gained popularity in the last couple of years. In fact, if you were to look at the slide and see from 2007 to 2012, in that 5-year period, the number of DAFs went up about 26%. And the amount that was invested in donor advised funds went up 42%. And the amount that was gifted or granted out of those donor advised funds went up 39%. So in that window of time, it's become very popular. And you know, it's very similar to a family foundation, but you don't have to worry about any of the financial, the legal, or the administrative red tape. So it's just a great tool. If you look at this flow chart on the current slide, you'll see how you set one up. Here we have a couple, John and Carol. They wanted to have a donor advised fund, so they went to their local public charity, and we can do those at the Great Commission Foundation or at Wycliffe. And they created a donor advised fund, and they called it the John and Carol Donor Advised Fund. They could call it anything they want, but they chose to be really original on that one. So after they set up the account, then they could fund it with whatever they chose. It was either cash or appreciated assets. And when they do that, in the same year, same calendar year that they fund it, they get a tax deduction for the amount that they put into the donor advised fund. Once the money is there, then they can make grants to charities of their choice. And they get to advise the charity on which of those grants they would like to have go to specific charities. And if they fit the guidelines of the charity, then there's no issue at all with them being able to do that. What are the benefits to a donor advised fund? Well, again, there's many, but let's just focus on 3. The first one is you can do some tax-wise giving. What do I mean by that? You can receive a tax deduction in the year you make the gift to the fund, but you can take your time to grant out of that fund to charities of your choice. Now, think about this. Here we are 4 months from the end of the year. If you don't have a DAF and you're thinking about setting one up, you can do it between now and December 31st, and you get the tax deduction in this calendar year, and then you can take your time in the next couple of years to figure out where you want to have that money go. There are some folks that think anonymous giving is important, and they base that upon the scripture that says the right hand should not know what the left hand is doing. You know, a donor advised fund allows people to honor that kind of conviction or preference, and it will accommodate that in a very seamless way. And then lastly, if you are interested in bringing your children or your grandchildren into your giving decisions, you can do that through a donor advised fund in a very easy way. In fact, let's look at a story or a case study that shows how a couple did that. Here we have Joe and Dawn Green. They had worked in real estate and acquired several rental properties over the years. And they would like to donate one of those properties to support ministries that evangelize the lost. And they would also like to engage their children in those charitable endeavors. And I say good for them. And they also would like to avoid a 30% capital gains tax when they add up what they would have to pay in that area because of their federal taxes and their state taxes. So what can they do? Well, the solution that we worked out with them was they established a green family fund, and they used their donor advised fund to donate their property into the fund. When they did that, it gave them an income tax deduction, and they bypassed their federal and state capital gains taxes. And then they, along with their children, they did research on their favorite ministries that were involved in evangelizing the lost all around the world. Once the property that they contributed to the donor advised fund was sold, they had some cash, and then they convened a family board meeting where they reviewed all the ministries that they had researched. And they voted on those that were most effective, and they recommended grants to those from their donor advised fund. So it really accomplished all of their objectives. A donor advised fund may be for you if you desire the benefits of a private foundation, but you don't want to have to deal with all of the red tape. If you need time to decide which ministries to support, but you want a tax deduction now, if you anticipate making both cash or non-cash gifts, or even if you're not sure and you think you might do either or, it'll certainly work for you very well. If you want the freedom to change beneficiaries, and if you prefer your giving to be anonymous and to bring your family into that whole process, this tool just works very well for you. Let's look at our fourth strategy or tool, and this is the IRA charitable rollover. What exactly is this? Well, it's a contribution made by the custodian or trustee of your IRA directly to a qualified charity of your choice. Now, I need to say this right up front, that for 2015, this has not been approved yet. It needs to go through both houses of Congress and then signed off by the president. We're hopeful that will happen. It's been in place for the last 9 years. So we're assuming that it will happen, and so we're going to explain it to you in terms of what we think it will look like if it does get approved. Consistent with previous years, it only relates to traditional IRAs, not for Roths. And you must be at least 70 and a half to employ this strategy. And you'll probably be allowed to do up to $100,000 per year. And 401k balances or 403 balances do not qualify. But if you have an IRA, if you roll those amounts into the IRA, then you can utilize this tool from that IRA. And if it does get approved, it'll probably just be approved through the end of this calendar year. There is some discussion about making it permanent, but we're not hopeful that that's going to happen. What are some of the features and benefits of this great tool? Well, first of all, it satisfies the required minimum distribution rules, and if you have an IRA and you're over 70 and a half, you know exactly what I'm talking about with these requirements from the IRS. It's tax positive, and what I mean by that is it never gets included in your income, and therefore you don't have to worry about taking a tax deduction for it. But by not going into your income and inflating your income, it keeps you from having to worry about being subject to the limitations on itemized deductions. And it also prevents you from being boosted into a higher tax bracket, which, because our tax system is progressive, as your income goes up, you not only pay more taxes, but you pay it at a higher tax bracket. And lastly, the IRA charitable rollover is very easy to do. You simply work with your custodian and they work directly with the charity. So an IRA rollover may be for you if you have a traditional IRA. If you're required to take the required minimum distribution, but you don't need that income. If you give more than 50% of your adjusted gross income, and therefore you're hesitant to not give any more, if you have this strategy, it might be the incentive for you to do some additional giving. If you want to make a lifetime gift from a large IRA balance, maybe you have more in your qualified retirement plan than you ever dreamed that you would need. You can move that forward and use that to take gifts to charity and have that be tax-free for you. On the other side of the fence, if you have a large balance and you anticipate that being going to charity when you pass, why not move that forward? Do it while you're alive and watch the impact you can have on the mission of the organizations that you have passion for and that you love. And lastly, if you don't itemize and therefore don't receive a tax benefit for your charitable contributions, this is another way of incenting you to have kingdom impact. Michael, I'm going to turn it over to you and let you talk about gifts of oil, gas, and mineral rights.
Thank you, Jay. Just one comment on what Jay spoke about, this IRA giving. I'm of the opinion if you give cash, whether you itemize or not, it's the best tax-wise way to give. So as Jay said, we're hoping and praying and fairly confident that Congress will extend this law to the end of the year. But stay tuned. The last type of asset we want to talk with you about today are gifts of oil, gas, and mineral rights. One of the biggest challenges folks who own land rich in these types of oil, gas, and mineral is the income taxes that come with production. I have a story of folks I met with up in North Dakota earlier this year, and their great-great-granddaddy had homesteaded some land, and they're blessed by what great-granddaddy did, but wow, the income taxes are pretty high. So we talk about several strategies with folks like this, how you can use to manage the income that type of asset is producing, depending upon your goals and your family situation, what you want to accomplish. There are essentially four we've talked about. One is making an undivided gift of an undivided interest in some of that land. A second is making a gift of royalties or an assignment for either permanently or for a fixed term of years. A third strategy is a charitable remainder trust, which acts as somewhat of a retirement plan where you can put income from those royalties tax-free into a special tax-exempt trust. And last is something called a life estate, which is essentially a bequest of land of sorts. I'm going to focus on the one about the mineral rights. And as I alluded to, I was in North Dakota visiting with this couple. Actually, they were retired missionaries. They came back to run the family farm. And it just so happens that his great-great-grandfather had homesteaded hundreds of acres of land back in the 1890s and whatnot. And several years ago, oil and gas was discovered under the land. It's up in what's known as the Bakken oil formation of North Dakota. And again, missionary couple, missionary lifestyle, they had more income than they knew what to do with. And so prompted by the Holy Spirit, they started giving away to the church, to local national charities, and they're giving well over 50% of their income, and they thought, you know, we're still paying more taxes than we like. Is there a better way we can continue to give but be more tax-wise in what we're doing? And after talking about their goals, we came upon this strategy. If you made an irrevocable assignment of some of that royalty income into a donor-advised fund, which Jay described, because, again, we believe people have multiple charitable interests, and it's a great tool to utilize. It did two things. First, it now shifted income off of their tax return and to that of the charity managing the donor-advised fund. So there's no charitable deduction in this case, but actually shifting your income off your tax return is a much better tax planning strategy. And so by doing that, then they didn't have to report the income. It went into the donor-advised fund, and then they can continue to make grants from that donor-advised fund to the charities they believe in. So that's just a real quick, simple idea. Again, if you own oil, gas, mineral rights, things of that nature, there are some strategies you can use to be tax-wise in your giving in such a way that you're putting more money into your pockets and really more money into the pockets of ministries and less into the taxman's pocket. I'm going to turn it back over to Jay now to describe, we've talked a lot about current giving strategies, how you can use assets to benefit those charities you believe in now. I'm going to pass it back over to Jay in just a second to talk about the ultimate giving strategy through your estate design, how using proper estate planning you can do more when the Lord calls you home. Jay, back to you.
Thank you, Michael. Well, this is our premier service that we offer to our ministry partners, and this is the one that I like to talk about the most because when we offer this service to people, we can see them have the greatest impact for the kingdom, and it brings them the greatest level of joy. When we do an estate design service, we will actually construct for you a blueprint, an estate design blueprint that you can take to your attorney, and then they can use that to actually construct your estate plan. So think of it this way. My wife and I built our dream home about 10 years ago, and when we sat down with our contractor, we had all kinds of ideas of things that we wanted to have in that home. And I remember our builder saying to us specifically, well, I like your ideas, and they all sound good, and I'm glad you're going to get what you want, but we got to make sure that we can really do this. And so he sent us back to our architect who built for us a design plan that we are then able to take back to our contractor from which he built our home. Well, this is the same kind of thing. Your attorney will actually build for you your estate plan, but he needs to have something in writing that becomes a blueprint that identifies the things that are important to you and your priorities, so that then he can build the estate plan from that. We construct that estate design for you. This is simply our way of saying thanks to you for our partnership in our ministry. And when you engage with us, we keep all of your information confidential, and there is never any cost or obligation for you to give to the ministry. And let me also say this. We realize that you'll have multiple charitable interests, and in the course of this discussion, those will come out. And some of those could be crew related, they could be Wycliffe related, they could be other ministries related. You know, we're really very okay with that. We think the Holy Spirit can guide you as to where you need to do your giving way better than we can. When we go through this process with you, we will anchor it in 5 principles of estate transfer. And let me just go through those real quickly with you. The first one, which is fairly obvious, but oftentimes not clearly understood, and that is God is the owner of all that we have. Now, we might not fully understand that because we have title to things, and the assets that we have our name on them. Well, to function in society and culture, it needs to happen that way, but from a spiritual perspective, God is ultimately the owner of all of those things. And yet, with him being the owner, he has entrusted those to us to be stewards so that we can use those for our good and his glory. The third principle that we try to talk about through this process is the whole notion that the priority of how you transfer assets in your estate is based upon dependency. So obviously your family has a dependency upon you, and ministries that you've been involved with are dependent upon you, and there may be some children that are more dependent upon you than others. And so that comes into play, and we help you to think through what that really means. In addition to dependency, the motivation for all estate transfer must be love. And again, we help you to think through what that love might look like and how it can manifest itself. Lastly, and this is really something that we bring to bear that other people in this process don't often think about, and that is we think and believe in our core that people are always more important than dollars. What does that mean? Well, we think in your estate planning process, you should never make decisions that are going to put loved ones at odds with each other, certainly while you're alive, but more importantly when you pass. And so we help you think about that at every step of the way. Our estate service is comprehensive. So when we go through that with you, we will help you to appreciate biblical stewardship in a greater way. And we'll clarify for you the significance of how to title assets, whether it's tenants in common or tenants by the entirety or joint tenants with the right of survivorship. We'll explain how that all works. We'll explain to you the importance of having a will or different types of trust, whether they're revocable or irrevocable. And lastly, and again, this gets back to the whole notion of people being more important than dollars. We will provide sound guidance to you on how you can choose personal representatives, trustees, and powers of attorney for your business affairs, and healthcare. So that, again, you're choosing people to be involved in this process in a way that minimizes, if totally removes conflict, rather than creating conflict. So again, this is a great tool. We offer it free to you, and it will help you to become the best stewards of all the resources that God has entrusted to you. Michael?
Thanks, Jay. Well, that all sounds great. Why should you include us in your team? Well, hopefully, from Jay and my perspective, you're going to experience no pressure, no cost, no hidden agenda. We're salary kind of guys. We don't sell products. We don't work on commissions, whatever you want to say. And we understand, as Jay remarked earlier, while we may work for a ministry, we know people have multiple interests, and so we're okay with that. Our job is to listen to what you want to do, why, and then based upon that, help show you ways of how you can accomplish your giving now and through your estate plan. We work with your advisors as needed, CPA, attorney, whoever that may be. And again, we understand your full array of options. Again, we're not beholden to any one type of insurance or financial investment. We don't do that. We are, as Jay so aptly put it, architects. We're here to prepare a blueprint for you so that you can accomplish what you believe God's put in your heart with the assets He's entrusted to you. And we believe as a result of all that, you will benefit from wise stewardship. You'll be wise stewards. You'll get that hug from the Father that says, well done, good and faithful servant. And as we've talked about previously, saving taxes, we believe that the strategies we share with you will help you transfer dollars that normally would have gone to the taxes to work and fund and advance the work of the kingdom. So with that, I'm going to turn it back over to Mark, who's going to do some Q&A. Mark, back to you.
All righty. Well, guys, thank you so much. What a joy it is to sit between the two of you men here, kingdom-minded men who, I don't know if you heard this in their presentation, but you know what? A donor advice fund is a great tool because it really doesn't matter to these guys who you're giving to. It matters that you're giving to kingdom work. Thank you guys so much. I love Big K Kingdom Work. We're all about that. Well, now's our Q&A time, but first I want to share with our audience that as a representative of the Jesus Film to our financial ministry partners, my bride, Leslie, who happens to be watching right now, and I have felt compelled to engage the Great Commission Foundation with Jay and others about our family's gift and estate design. So Leslie and I recently completed our complimentary and confidential estate inventory with Jay. We're so thankful to you, sir, for helping us with that. And now we are in the final stages. We had our third appointment with the attorney. We wrote a check to that guy, and he says, done deal. So thank you very much for helping us with that. I hope our watching audience will do the same with either of you guys or somebody that does the same kind of thing that you do. Remember, Big K Kingdom, folks. This is all about pushing Jesus and his kingdom agenda. Well, I've been working with ministry partners for nearly 20 years now, and I've seen literally firsthand tens of millions of taxable dollars redeployed and mobilized for this kingdom building we just keep talking about, simply by introducing my friends to my colleague, Jay. I'm sure this happens all the time at Wycliffe as well. I just love it. I go out and I make friends with people and I love on them. I introduce them to Jay, and next thing you know, lots of translation work and teamwork and all kinds of things are happening around the world so that men and women and boys and girls are coming to know the Savior. Well, I'm done preaching now. So I'm certain our audience has lots and lots of questions. So let's turn our attention to that. If you still have questions, we're still taking questions, by the way, in that text box on your screen. So let's go to the first question. Okay, guys, here we go. How do I set the gift value for a gift of real estate? Who wants to take that one?
Well, I'll take a stab at that.
All right,
you know, there is a requirement that real estate, if it's over a certain dollar amount, or you anticipate it being over a certain dollar amount, you need to get a qualified appraisal. And the IRS is very specific about what those requirements are, and so you need to secure that professional appraisal. And if you work with your CPA or your attorney, they can delineate those specific requirements for you. But that is a very important step, and it needs to be an appraisal that's done for tax purposes and not for real estate selling purposes. So, important.
Okay, great.
I would just add to that that the magic dollar amount Jay mentioned is anything over $5,000.
Yeah. Oh, okay. Good to know. Good to know. All right, here we go. Question number 2. How do I set up a donor advised fund, and is it complex?
Michael, why don't you take that and then I'll jump in.
Jump in. No, actually, setting up a donor advised fund, one of the beauties of it is it's very simple to do. A 2- or 3-page application. I know both Great Commission Foundation and Wycliffe, it can be done online. You can make your giving online, but it's not complex. It doesn't require an attorney to draft it. It's just a simple 2- or 3-page application. Your fund is set up. You make a gift into it, and really it could take a day. Maybe a couple of days at the most. It's very simple to do.
Good, good.
Yeah,
Great.
and I would say the same thing with the Great Commission Foundation. It's a couple-page application, needs some signatures. When you send that back to us, you either include a check or indicate that you're going to do a transfer of stock, and we can set that up for you in a week to 10 days, and you can have money working for you.
Wow, that's pretty quick.
By the way, you can also put real estate in that in business interests, not just cash and stocks. You can actually put complex assets, real estate, business interest into a donor-advised fund.
Wow.
It takes a bit more work, but
Yeah.
definitely something that can be done.
Well, as the guy who goes out and talks to the financial ministry partners, I know that when people find out about what a donor-advised fund is, and it's analogous to a family foundation, only you don't have all the headaches of all the administrative type of work that you actually have to do if you have your own foundation. They find out about that and they're just like, wow, how does that work? And how can I set that up? And I don't have to give it all at once, and I had this huge income. Can I put it all in there now and then make decisions later? When they find this thing out, they're really, really excited. So I'm glad we're doing this webinar.
Yeah.
What should I give from my IRA when I can, why should I give from my IRA when I can just give cash?
Jay, you talked about that. I'll toss that one to you.
All right.
Well, I think when you give from your IRA, you're able to utilize the assets that are sitting in that retirement account that would typically only be used for your own personal benefit. And if you file the IRA direct charitable rollover provision, you can have those monies be used now for kingdom purposes as opposed to just helping you. So again, it gives you more options to your giving profile.
All right. Well, good enough. Good enough. Hey, I got a question. Can I ask my own question?
Of course.
Since I'm the guy who
We'll try to
has
answer.
the mic here right now. I got a question. You know, I keep hearing you guys say that it's from a traditional IRA, and we hope this law stays on the books and President Obama signs it and all that kind of good stuff, because we've seen a huge increase in income as a direct result of this strategy. But why is it just a traditional IRA and you can't do it from a Roth IRA? My understanding is a Roth is a pre-taxed, you put your money in there, or I know after tax you put your money in there and it grows tax-free, and a traditional is you put it in there before tax and now it grows before tax.
Well,
ahead,
take
Mike.
a stab in it, Jay.
Go ahead.
Why it's better is just for the reason you explained. With a Roth IRA, you've already paid the tax up front.
Right.
When you take money out of a traditional IRA, you're paying tax on that distribution. So you've already done all the tax work in the Roth IRA. You've paid it.
Right.
With a traditional IRA, you avoid that tax.
Got it.
So when you take it out of a traditional IRA, if you just went into your bank account, you'd be paying taxes on the distribution. By redirecting that to a charity, there's no income tax paid.
Okay, great.
And I would say, with a Roth, there are no taxes to avoid.
Yes.
With a traditional IRA, there are taxes to avoid, and
Exactly.
the strategy can help you do that.
Okay, just for all those people out there who are like me, it just takes a couple of times, for this to sink in. Thanks for answering my question. Hey, here's a question from Rita. Rita is asking, is there a time limit for the dollars from a property put into a donor-advised fund? Is there a time limit?
Well, we at the Great Commission Foundation don't really have a time limit. Obviously, if you were to put it into a DAF and several years down the road there wouldn't be any activity, we might be concerned about that. We do like to see a person do about 10% each year from that DAF. And within that amount that they give, we want 10% to be used for accrued ministry. The other 90% can be used to a ministry of your choice. So we don't have a firm requirement that you do that. But obviously, the point of having it in there is to give it to a kingdom work, and so we want to encourage you to do that.
Mm-hmm.
Exactly.
Good, good.
And just to add, I think statistics show most donor-advised funds, about 20% of the principal is granted out in any one year. But
Yes,
to
that's
Jay's
correct.
point, we try to, I know when we talk about it with people, we don't want people to be barn builders. This is to be put to the work
Good term.
of the kingdom and other charities they believe in. I think most people get that, some sooner than others. But to your original question, reader, there's no legal time limit or minimum distribution amount that's applied to donor-advised funds.
Gotcha, gotcha. Okay, good answer, guys. All right, here's another question for you. I'm a small business owner, and I'm thinking about setting up a family foundation to do my giving because I can involve my children. What are your thoughts on this?
Well, let me respond to that. In fact, I have a great story to share right around that very topic. And the story is this. I was having lunch with Neil and Barbara. They were young business owners. And they had set up a DAF because they liked the tax benefits that they were getting from it. And in the course of our conversation, they shared that they had children, young children, probably middle school, maybe high school age. And they were concerned that their kids weren't having the same priority for giving that they had. And they wanted to know if they needed to do that by having a private family foundation. And I said, well, you could, but I got a better strategy for you, and that's using the existing DAF that you have. And so I said to Neil this. I said, listen, tell your kids you're going to have a contest. And you're going to have them sit down and think about the needs around the world that they really have a passion for. And where in the world those needs are the least met. And then send them loose, have them do some internet research so that they can figure out, which ministries and charities address those needs that they've identified. And have them pull together a proposal. And then in a few weeks, let them know that you're going to have a family meeting. And you may have it at dinner, after dinner, maybe Saturday morning, where you're going to have each of them present the ministries that they've researched. And you're going to vote on them. Now, I got to tell you, you want to get 2 votes, and you want to have your kids each have 1, so that you have a little bit more skin in the game. But after they do a vote, then you decide that the 3 ministries with the top 3 votes are the ones that you're going to be able to give to. And when I shared that with Neil and Barbara, they really liked that because they said, wow, what a great way to involve our kids in giving and thinking about how to do giving well and have it be fun and winsome. So that's my story around how to do that.
That's really cool. I like that. That's a great story. I have my own little story. I like to tell you a little bit about a woman I used to call on in another city in the United States. Her name was Miss Nina. Now, her children were grown. She had 4 children, 2 believing and 2 not yet believing. And Mom read Ron Blue's book, Splitting Heirs, H-E-I-R-S, Splitting Heirs, yes, double entendre. And so Mom wanted to make it clear to all 4 of the children, and by the way, her grandchildren, what her intent was inside her trust. So she took the recommendation in the book, Splitting Heirs, to go to a city that nobody else lived in, go to that city, bring all the kids, bring the grandkids, and have a meeting and explain the trust to the people, all the kids, all the grandkids, so that they knew what was going to happen at her homegoing. Well, a couple years ago, I get a text from one of the believing sons who happened to be the trustee, and he said, Mom went home. And I go, I didn't know she was gone. No, Mom went home. Can you come to the memorial and speak? And I said, I'd be happy to come to the memorial and speak. And, through tears, I told about her love for Jesus and Bible study fellowship leader and reaching out to the neighbors across the street who happened to be Pakistani. She used the translation that they spoke from the Jesus film to share Jesus with his family. So at the memorial service, I get done speaking, I sit down, and the woman from across the street walks up to the open mic, and in her burqa, through her sobs, was telling how much she and her family loved Miss Nina and how sad they are that she's gone. And her last words were these, I hope she's in heaven, which is really code for Mark getting up and running back to the front of the room to grab the mic to share the gospel of grace alone, through faith alone, in Christ alone, to everybody in the audience, especially the woman who just spoke. So I was able to share the gospel and to share 1 John 5:13 that says, you can know that you know you're going to heaven when you pass if you trust in Christ. Well, she was back there sobbing, and the son in the front row, because the gospel had not yet been preached at this memorial service, he's like this.
I love it.
Because there were other family members in the memorial who had not yet known Christ. These are the things we get to do. Yeah. We get to help people lay up for themselves treasure in heaven, where there is no effect of this world. It's just awesome stuff. Okay.
May I just jump in?
Yes,
one point? Awesome story, and I'm sure there'll be people in heaven because of that.
Yeah. Terrific.
I think what your gal did was a good thing, though. When estate planning, many people want to keep it close to the breast, and then the kids don't know anything until they passed away. I know Jay and I always try to advise people, once your plan is done, if you have older children, heirs, gather them together and say, this is what's going to happen when I die. You're hearing it from my voice, and here's what I'm doing and why. And that gives all the kids, let's say their children, understanding this is what mom and dad are doing. And they hear from your voice, this is why I'm doing it.
That's right.
So that when you pass away, suddenly there's like, what? There's no surprises. Oh, she loved you more than me. You avoid a lot of that family bad dynamics. So we always try to encourage people, if once you've got an estate plan, at the appropriate time, sooner than later, share it with your older children or heirs so they have a real good understanding what you've done and why, for both economic reasons, spiritual reasons, many. So,
which then ties back to the point that I made earlier when I was talking about the estate design process. We do believe that people are more important than dollars.
Amen.
And because that's true, we want to make sure that people are sharing those plans and those ideas with their children so they can process them while they're alive. And so when the parents pass, your kids are still hugging each other.
Exactly.
Who wouldn't want that?
Amen. Well, let's go to our next question. Do we have any questions left on? Oh, here we go. Help me understand again why I need your design process in addition to all the other services of the various advisors that I have providing, information to me in my life, like my CPA, my attorney. They already know about all these areas, don't they?
well, I'll take a stab at that, and I know Jay can add to
please
it.
do.
Okay.
I think one perspective we bring is that we have, well, Jay had it up in that one slide, the 5 principles of Bible stewardship. I think we work from that foundation, from that paradigm, and not every CPA or attorney does that. And so I think for us, it's yes, it's a estate plan, but it's also a spiritual process and talking through values and whatnot. And so there's I know a lot of fine Christian attorneys and whatnot, but we kind of bring a different flavor to it. Maybe that's not the right word I'm trying to use here, Jay, but a different perspective when it comes to that planning. And we don't charge for it. We can help you work it out before you go see the attorney, and probably save you a lot of money. But Jay, what are your comments on that?
We really want to be a part of your team.
Yeah.
And your team is made up of your attorneys, it's made up of your CPAs, your financial advisors, your insurance specialist, and it should also include a stewardship specialist. And that's what we are. So we bring a perspective that's not only stewardship grounded, but it's biblically sound. Yeah. And so we can really kind of round out that mix for you. I've got a great story. I'll share this with you. I was on the phone with a guy by the name of John. And he and his wife, Luann, had just recently retired. And they had had successful careers. And they hadn't done much estate planning work. And they were thinking about meeting with their attorney and their CPA. And I said, I think that's good. I think you need to do that. But let me get you ready to meet them. And I said, we have the service that we can provide for you. And all you need to do is, by completing an inventory, you can provide us the information that we need, and we can prepare this blueprint for you that you can then take to your attorney, so your attorney ready, and you can share with your attorney what it is that you want to do and why. You can have an intelligent conversation with them. You can be in control of the conversation, and you can really come across as if you really know what you want to do. And we can do that for you. It's free of charge. We simply do it as a way of saying thank you. And so when John heard this, and I heard Luann on the back of the phone saying, well, ask him how much it cost. Ask him how much it cost. So John asked me, and I said, John, it doesn't cost anything. We do this because it's our way of saying thank you as you being our ministry partner. Well, obviously, John and Luann were elated because they realized that if they engaged in this service, they could have an estate plan in place that could truly accomplish their wishes. Who wouldn't want that?
Yeah, right. I want it. I got it. I am attorney ready. So all the attorney jokes running through my head right now, they're just crazy. But we'll not go there, okay? Hey, here's another question. This is from Doug. Can I send my IRA $100,000 to a donor-advised fund, or can it just go straight to the charity?
Good
and then
question.
the second part of the question is, what are the chances of Congress renewing this for 2015?
Well, how about I answer the first part and you tackle the second part?
That's
good.
It's interesting with the law. You cannot actually send it to a donor-advised fund. There's a quirk in the law, and I won't get into the reasons why that is, but no, you cannot do an IRA rollover, if that's what you're referring to, Doug, into a donor-advised fund. It has to go to charity, and there are reasons why Congress has put that in there. So no, you cannot. Sorry.
Let me take a stab at trying to read the mind of Congress on this one. I think it may be, and I think this is at some level valid. I mean, this is a provision that they give us. They don't have to. And I think they put it in place because they want those dollars to be used currently because they want to further the social good, at least from a government perspective. And we say, well, we want you to further kingdom good by doing it. Right. Well, if it goes into a DAV, it has a chance of not accomplishing that purpose, and then so they would not be as excited about doing it. As far as the chances of this happening for 2015, well, let me just say this. Congress has resumed for their fall term this week. And as far as I know, this is on their agenda to discuss. Now, they have a long agenda, and this needs to go through both houses of Congress, and they need to agree on what the terms and provisions are. And then once they do that, it needs to be voted on by the president. So we're hopeful that something will happen, but we do believe it may happen late in the year. And so we encourage people that if this is something that is of interest to them, is to kind of put the mechanism in place to connect with your custodian of your IRA, have everything all set to go, so all you need to do is turn that key when our president signs off on it. Because last year, it happened on December 19th.
Oh, wow.
And people only had 10 days to respond. And if they didn't have anything in place before then, it was very difficult to make it happen. So anticipate approval, get everything ready to turn that key, and you should be all set.
Jay, just a quick story. I had lunch yesterday with one of our Wycliffe donors, and she was so upset because last year it happened late in the game, and the company that manages her IRA was not able to turn it around. Instead of leaving $100,000 to charity, she had to recognize the income. She told me at lunch, it's not happening this year. I've actually talked to my custodian. All the paperwork is in place.
Oh, good.
Yes.
The minute that the law is changed or approved, she's not taking any chances. It's already set, to your point. Get it set up now, because last year they gave us 12 days. And even the custodians, the companies that manage IRAs, several could not turn it around fast enough, like this particular donor. And she was not happy. So just told me yesterday, it's in place. The paperwork is signed. It's ready to go. And so I think that's great advice you give folks. We're pretty certain that Congress will extend it. We just don't know when or how soon or how far from the tax year. So if you're thinking about it, get ready now.
Got it.
Talk to your advisors now.
Yeah, yeah. Well, I assume that it's I hope it's an electronic process that'll make that happen quicker. So get it done now, in other words. Don't wait for Congress to make a decision. Well, guys, thank you again. What a great presentation. Now, it's my understanding that our guests can contact either one of you at any time. They have your contact information that'll be up on the screen at any moment here. They're ready to help you in any way so you can know that your bases are covered, just like the title of the webinar says. They're going to make you attorney ready, okay? Remember, the video of this recording will be available for your viewing again at this same web address beginning Monday, October 5th. Okay, please feel free to share this with any of your family members or friends or anybody who may have a charitable intent like you do. If this web presentation has been of value to you, please let us know. Your comments back to us is what actually drives the content for our next webinar. So please, 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 someone you know with either Wycliffe or Campus Crusade, please let us know, and we'll answer the questions that you have based on your comments. So that's going to be coming up next April, our next webinar. And you're invited to something similar to this. We're just overjoyed to be able to bring you expertise from these guys to make you attorney ready so that you can accomplish your goals, your charitable giving goals to whatever organization you want to give to. So guys, thank you so much for your expertise here today. Audience, thank you for joining us for the last hour. We are just overjoyed. God bless you this fine Saturday. See you next time.